Lee joins us now. It's good to have you on our program today. Tell our producers, investors overreacted to the Fed meeting. It seems to be the consensus, the growing consensus that was what happened yesterday. Why do you think that?
Hi, Scott. Kevin Warsh has a very different communication style, and he plans to kind of modernize how the Fed monitors data. So I think the markets took the removal of that forward guidance and even looking at those dot plots as a hawkish pivot. But I think instead, I think it's a Kevin Warsh that's saying, listen, I'm going to be using modern data, real-time alternative data to understand what's going on with inflation. And at this moment, we have no conviction. So to me, I think it's actually a very markets-friendly view. I think the homework now is for investors to understand that if data changes, those dots are going to move pretty quickly. So I think overall it's actually quite a dovish meeting.
So 7,500 is where we sit right now on the S&P. Been looking for a few different scenarios to play out in the market between now and the remainder of the year. If you think that yesterday was dovish and a lot of other people thought it was hawkish, and you came into yesterday thinking that we were going to have some moment where the market was going to have a correction of some magnitude, have you changed that view?
Scott, we still believe later this year there is going to be an abrupt change of market conditions, one that feels very much like a bear market. But we don't want to stand and call a top. I think conditions are still favorable for stocks. You know, the SpaceX IPO was very successful. And as you know, there's been a cadence of pretty good news coming out of that company. And it is a very small float company with only 90 billion of float. And I think Kevin Warsh, his view, this was actually kind of a market reaction to his first press conference. But I think that the real challenge is going to come later this year. So I think, yes, very much there is going to be a change in market tone, but I think it's too early for people to expect that to happen now.
But when you say there's going to be a, quote, abrupt change of market conditions, you can't make a statement like that without telling me why you think that. What's going to happen?
Well, I think that there are, let's say we can see with pretty good visibility three things happening. You know, one is that we know markets eventually test, especially if a Fed that's redoing the framework with 5 task forces. I think that's in 2026. The second is that the IPO of SpaceX, today there's very little float, but that's going to unlock later this year in phases, along with the IPO of Anthropic and OpenAI. And the third is that because of just the disruptions we experienced so far in the Straits of Hormuz, there is in the supply chain coming shortages. Those are actually the preconditions. I think the fourth catalyst is that speculative firepower runs out. That will happen when some things like margin debt, experience levels that are associated with short-term corrections, or it could be that you could see a lot of cash move out of the sidelines. But I don't have any sense that investors are that bullish yet. So to me, I don't think that fourth piece is in place yet.
All right, good stuff, Tom. Talk to you soon. Thank you. Fun stretch, Tom Lee.